Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel joined by Dennis Dick. Joel is out for the remainder of the week on vacation. Man, what an after-hours session we had yesterday. It was a good day for the market until like 4:15 hit, and then Apple got halted, and then they cut their guidance, and that was the story of the after-hours session there. And then this morning, we have surprise news in the biotech space as Bristol Myers is buying CELG. So a lot to discuss on our show. I'll just bring Dennis in right now. Dennis, what have the last 12 hours been like for you?
Insane. There's been so much news, and it started last night. So let's start right with the Apple news from last night. So I was trading, after hours like I do, and, trading in tech stocks, trading all kinds of different things. And then I didn't even notice it, but a trader friend just pings me and says, Apple's halted. And I was like, oh crap, it is. And then I'm like, okay, well, I don't have an Apple position, so that's one good thing. I still have it on my long-term portfolio, obviously, but there's no trading position or anything here, so there's no adjustments that need to be made on the fly. But then I'm like, okay, well, I go and I'm checking the news, but the news isn't out yet, it's just halted for news. So that initial halt, they tanked the Qs down about $1 because people are expecting, something's bad. Then, there was some rumors flying around, maybe they're going to do an acquisition or something. And all of a sudden, the Qs come all the way back up to almost flat. And then my buddy is saying, should we short the Qs? What should we do here? I was like, I don't know. I kind of want to wait for the news. I don't know if the news is here yet. So just to, short everything blind, just banking that it's bad news is, obviously, in hindsight's 2020, it would have been good. But I was like, I'm just going to sit back, wait for the news. 8K comes out. Then we're quickly trying to leaf through the 8K. But, algos obviously have, news readers that are going to be doing it faster. So as soon as the 8K hit the tape, the Qs just tank. And then every tech stock just starts tanking. So I tried to short some tech stocks. I did get a few good shorts off last night. But overall, it would have been a lot better off. I would have taken a chance and hit the Qs when they were basically flat. And give us the news there, Spencer, that Apple actually came in within that 8K.
Yeah, so they cut their Q1 sales guidance. The guidance they had previously issued about 2 months ago said their Q1 revenue would be in the range of $89 to $93 billion. Their revised estimate for Q1 revenue is down to $84 billion for the previous quarter. The report that will be coming out in a few weeks now. They also cut their gross margin forecast, basically pointing the finger at weak iPhone sales in China, which is interesting because also the EEM was getting hit on that too.
Yeah, you're seeing a lot of China stocks get hit on this because this is what the market has been nervous with, is the slowing growth in China. And then you have the most well-followed company out there basically blaming China for going to lower guidance. And I can't remember, when is the last time that Apple lowered guidance? Like, I can't remember this. I've been trading 20 years. I don't remember this ever happening. I'm sure it has, but I can't remember it happening. And I'm not sure if anybody can, out there can help me with that, but I don't remember them ever lowering guidance.
I read it was the first time since 2007.
Okay, so the financial crisis. So a lot of headlines back during the financial crisis. So not surprising that, I might forget that with the crazy markets we had back then. But okay, first time in like 11 years, Apple lowers guidance. So shocker to the market. Apple obviously reopened significantly lower, getting hit hard here this morning. It's down almost 9% here now. I still have in my long-term portfolio. But, and the market was killed here overnight too. And I expected the market to, I was like, man, this is going to be really ugly because we were just starting to get some momentum going. Some of these tech stocks and these semi-stocks starting to show some life. And then, Apple does this to the market and all that momentum is going to be lost. The only thing here this morning, though, we get a little help. And the help here came out about 6:50 this morning Eastern time. Give us the details on what this other big news was, Spencer.
Yeah, surprise, surprise. Bristol Myers Squibb has decided to purchase CELG at $50 a share in cash. That values CELG at $74 billion.
Well, $50 in cash plus 1 share of Bristol Myers. So that obviously values.
Right.
Bristol Myers was 52.02 close plus 50 in cash is $102.02 is where it would value Celgene if Bristol Myers was still at $52.
Right.
Obviously, Bristol Myers is no longer $52 because we know they hit the acquire, especially when they're paying a hefty premium for a stock. So Bristol Myers is down $7, down 13%. Celgene getting a nice lift, obviously up 33%. I have that in my long-term portfolio, so happy about that. Bad news was I was short a lot of biotech stocks. So everything last night in my trading portfolio. So basically the money that I made in my long-term Celgene, I'm probably losing in my trades. So, normally I'd be very happy with this today, but I just so happen to be short a lot of biotech. And I've obviously covered most of that now at losses. We've seen Gilead rally 2 points on this in sympathy. You're seeing, basically the IBB, you can look at it this morning, which a huge component, 6%, I believe, is Celgene. So it's up 1.5%. So a little victim of the circumstances there. I mean, these things happen. I happen to be on the wrong side of it in my trading portfolio, but on the right side of it in my long-term account because I own some Celgene shares, but not happy with some of my losses in some of these biotech stocks in my trading portfolio. But that happens. So you're going to trade stuff overnight. There's risk. You might be long, you might be short. So you just got to quickly, do whatever damage limiting you can when stuff like this does happen.
Okay, so those are the two biggest headlines of the overnight session. Let's go back to Apple and let's sort of parse through all this.
Sure.
And we'll start with the Apple suppliers. And, in hindsight, this looks like an obvious headline. We had several suppliers cut their guidance in the November-December range. Light cut their guidance, Cirrus cut their guidance, and they're both getting hit this morning as well as all the other basically tech stocks are, and especially the Apple suppliers. But Light and Cirrus
the Apple suppliers immediately getting hit. I mean, most of them don't have much of an after-hours market. I actually tried to sell a couple of them, but there's just nothing to be had. So you look at this now, Cirrus Logic, SCRUS trading down 7% in the pre-market. SWKS trading down 6% in the pre-market. You go QRVO is another one. You could go, it's offered down at 58, even though it hasn't traded this morning, but it's going to be down $3. You can get into the bigger ones like Broadcom, getting the beats down 10 points in the pre-market, and then just spills over to all tech stocks. So you see like Microsoft trading down. You can go to basically any tech stock, and for the most part, unless it's a biotech stock, it's trading down. But yes, Applied Materials trading down significantly here in the pre-market. I had some STX as a swing trade on Seagate, and I sold that last night around 38.5. I sold some yesterday on the run up, and then I sold the rest of it at 38.5 last night. Obviously it closed 39.08, but I was like, I think I probably could lose $1 on this, so I'm going to get out of that position while I still have some profits in it. Western Digital, I'm still in WDC. I kept that. I had that on the long-term account, so trying not to put that one on there, but regardless, or take that one off because I like sometimes trading my long-term portfolio, and sometimes that's not always the best idea. But wow, you look at this move here, you look at all these things trading a lot or significantly higher, and you think, or you see all these tech stocks trading significantly lower. So I was looking at Celgene for a second, and you think, man, I don't know if there's more pain ahead here. You would think that this has got to be a bad, omen for the market, though, when you get Apple warning. So I got to think, even if you get a rally in some of these tech stocks, maybe get met with more sellers because there's going to be a lot of nervous people now, especially about China. And like you said too, Spencer, if you look at the EM, it's trading down over 1% here this morning. You can look at the FXI down 1.3%. You can look at the big Chinese stocks like Alibaba, Baidu. They're all trading significantly lower. So Apple basically knocked every tech stock down this morning. Biotech's getting a lift, though, because of Celgene.
And think about what this does in terms of the overall market. So we already had a government halt. All the econ data government shutdown. All the econ data is halted for now. We have a Fed meeting at the end of the month. We have this hard deadline on March 1st between China and the U.S., and it seemed like it was already a really nervous market. And now Apple, of all companies, just lowered their guidance for the first time in 11 years. I mean, this if this doesn't scream sit on your hands, I don't know what does.
Well, yeah, exactly. If you were thinking about coming in and investing in some of these cheaper, you're going to be thinking twice here now because, the market has been talking, China is an issue and is the growth slowing over there. Now, who was it? There was somebody, last week or 2 weeks ago, FedEx. warned about this first with the
Yeah.
slowing growth in China. They were blaming, was it Europe or they were blaming China? I can't remember. They were blaming not North American markets though. Maybe it was Europe they were blaming.
Let me look. Let me go back.
I can't remember. I'm trying to, honey badger memory here. I think it was, it might have been Europe actually with FedEx. I'm just trying to remember.
Yes, it was. It was.
So, okay. So anyways, but they've been worried about, the market's been worried about China. This is not going to help those worries. It was an impressive day for the market yesterday. I mean, we were down significantly, end up getting all those losses back. It had me thinking, you know what? Hey, maybe we are out of the woods. Maybe those lows are going to be safe. But now you see a move like this from Apple and you think, I don't know. But, the first test is going to be yesterday's low. So let's go to the S&Ps and just analyze this. You do have some good news with the CELG deal, so that could help the market too, don't forget. But you look here, 245.95, yesterday's low on the SPY. That's where I would think, you probably find some buyers nibbling in here again at yesterday's low. If you take that out, it starts to get dicey because there's really nothing until you go down the next low, 238.96 from the 27th. So if they can shrug this off, this would be fantastic news for the market if they somehow can shrug off. I mean, Apple's not coming back today, but if they can somehow bring some of these other tech stocks back, that would be good, really good news for the market. I don't know if they can do that, but the CELG deal is going to help. Yeah. Go over to the biotechs and just talk those for a second.
Let's do it.
Obviously, CELG trading significantly higher, Bristol Myers trading significantly lower. Interesting. I've got the spread on here just now, and I'm obviously looking at it there. Bristol Myers is coming back from the lows, but I just look at this and I think, okay, so basically it's an easy arb to figure out. You just add $50 to the price of Bristol Myers, and that's what the CELG price would be upon closing. So you're only getting a 7-point discount here right now. And that's interesting enough too, because you're in a pretty wild market, a market that a couple deals like Pfizer and Allergan were killed a couple years ago. I don't know if it's slam dunk. I mean, it probably is going to go through, but a 7-point discount here in a market that's full of risk. Maybe that's right. Maybe a 7-point discount's fair. I mean, if it was 2 or 3, and where I'm getting that discount from is I'm just looking at where Bristol Myers is trading. So I had $50 to the price of Bristol Myers. So on takeout right now, it'd be $95.90 for CELG, where CELG is only trading $88.90. So that's where I'm getting the 7-point discount from. So maybe that's fair. What do you think on a 7-point discount? I mean, we see Red Hat, which is a cash deal. I think a cash deal is up at $190, trading with a 15-point discount still. So, and that's obviously on the IBM deal. So I don't know. I don't think I'd be running here and buying CELG this morning. I probably am fully going to sell the shares out of my investment portfolio probably as soon as I get done with my open. I'd imagine I'm going to bank it and not sit around for the last 7 points.
Is this 2 years in a row we've had a major biotech deal right at the start of the year? I'm trying to remember
who did we have? Who was the other one?
I'm trying to remember. I think it was Bluebird, and they bought. They've been rumored with CELG for a while now, but no, it was Bluebird. Didn't they buy Kite last year?
Well, Gilead bought
Kite. Okay, and that was
so you haven't seen one of the big guns get taken over. When I think the big guns, and looking at the IBB, I think like Biogen, I think Gilead, I think CELG. We haven't seen one of the big guns. We've seen those companies do the acquiring, but we haven't seen one of the big guns get acquired. So, this is big news, especially even for Gilead. Look at Gilead trading up 2 points here because you know what? These things are dirt cheap. So if Big Pharma gets involved, and, Big Pharma had a pretty good year last year, so they got some cash to play with and coin to play with, in their own currency. Bristol Myers actually, funny enough, was probably one that underperformed last year. So maybe that's why they're trying to, maybe spur and, get some, growth from somewhere there because they're having their own struggles. But it's a big premium for Bristol Myers to pay. So not surprising that the ARBs are going to knock Bristol Myers down significantly on the news of this deal.
So now, the question is now the logical question every time we get a deal in place is always, okay, will this kickstart the rest of the sector? And we ask ourselves that question every single time we have a big deal in any space, but especially in M&A. So are other stocks in play here? Does this make you more inclined to want to just buy dips and buy rips?
It makes me more comfortable saying there's a lot of value in biotech, and I have a lot of biotech stocks in my investment portfolio. We've talked about that on the show multiple times. I happen to have CELG, which obviously is lucky. Somebody in the chat saying, would you be selling the rip in CELG? I intend to. I intend to probably book I'm not going to sit around for the last 7 points. I don't think in CELG. I don't know if I have much interest in owning Bristol Myers shares. So I probably am going to sell out my CELG portfolio, my CELG position, my long-term portfolio here this morning. Gilead, I do not own. I've owned it a couple times, but I've got Allergan in my portfolio? Does this, make Allergan, all of a sudden start to think again? I mean, we already had Pfizer trying to buy Allergan at $300 once. Can this kickstart one there? I don't know. Allergan's bid up a little bit here in the pre-market, so somebody's thinking that maybe it's potential. But you can look, there's a lot of these big biotech stocks have been very beat up. I mean, this has been a sector that has been just pretty much hit the hardest in the last couple of months. So now you get, one of the major components coming all the way back and all of its losses back from October and November, and, getting bought out. It makes you think, okay, well, maybe there is, some potential buyers for some of these other ones, especially the smaller ones. So, you can look, and I don't know if it's going to be XBI you can look at, because it's hard to pick which ones it's going to be. And nobody's going to know, who's going to be, potentially in play. But I think it gives a little bit of life to the entire sector. And it didn't have much sector before, or it didn't have much life before.
And IBB up this morning, obviously, as pretty much every major biotech stock is up.
Yeah.
So with biotech up today and tech down today, how are you going to approach the open here?
Well, that's just it. It's so confusing as a trader here. What do you do? I mean, you've got a horrible headline from Apple, which, other things being equal, there's no biotech CELG deal. I think this market would be a lot lower. You've seen now the market rally 15 handles since the CELG deal is announced. So the biotech is definitely going to help the market a little bit here this morning. Does it help it enough to offset the bad Apple news? I don't think so. I think we're still going to end up in the red, but at least it gives you hope. So an Apple's, down 12 points. It's not like, and one thing to consider, and Matt Cole, props to you, because, you've been talking, he's one of the Benzinga guys, and, he was actually saying, last night that, he's, was surprised that, more people didn't expect this from Apple, because we had the suppliers cut before. And it's a great point that he's making. You had multiple suppliers warning in the last month or two. So maybe it's not surprising that Apple was going to warn. But I mean, the market obviously is still surprised. The stock is down 12 points. But if this stock was at, let's just say, we didn't have the last 2 months happen, Apple was trading up at 220 still, and they warned all of a sudden, you would have seen the stock down a lot more than 12 points. But it's already, obviously down significantly here. We knew, they were struggling a little bit. It wasn't a surprise. Citigroup had cut estimates. Other people had cut estimates here. I mean, so it isn't completely out of the blue, but it's just bad timing for the overall market, because we were just, like I said, just showing some life, and all of a sudden Apple poo-poos the whole market here. So, well, it's going to be I'll just say this, it's a very important day for the not for Apple, but for the S&P and for Apple as well. If the market can come back from this, that's telling you, okay, these buy the dip mentality is back. But if they just starts to crater and keeps giving it back, and the other tech stocks don't rally, then you got problems. So almost a day where you got to sit back as an investor and see what happens. If they can shrug this off, then maybe you do start nibbling, because maybe there is, a buyer below. But I don't know if they can shrug it off. So we're going to see what happens here today. Very important day for the market.
So looking at Apple here, at what point are you comfortable maybe nibbling a little bit?
I'm long it in my long-term portfolio already, and I have no intentions to sell it.
Okay.
So if you look at the valuation, I don't know, it's probably trading like 9-10 times. I guess you got to adjust it a bit because it's lower guidance here, but I don't know. I think there's value here. I wouldn't be long in my investment portfolio. So I still own Apple. I'm not intending to sell it there. So I think long term it's valued at 145, but the trend's not your friend. So let's see what it does with those couple lows. 145, 146.59, 146.72. You're below that right now. Can we get back above that and hold those lows? If not, I always say when stocks are making new lows, you got to go from a trading standpoint. So if we can breach those couple lows from just a few days ago, 140 is probably on the horizon then. So then you start thinking about the 140 level. But I'm not coming in here and shorting Apple down 12 points because it's already been hit pretty hard. So I'm probably sitting on my hands as a trader on this. And as a long-term investor, if I didn't own Apple, maybe a nibble a bit. I'm comfortable with my own investment position though, and I'm not selling it.
This is crazy. I just put up a daily chart, and even a weekly. This moves crazy. You sort of lose perspective looking at the 5-day, 5-minute chart. But man, Apple.
Well, you look at the move from the last 2 months. This was 220 2 months ago, $145. This was the biggest company in the world. Now not because it's been hit in the last little bit, but you're still talking top 3 company in the world. It's been killed. And that just gives you perspective on the market. Even though we've had a significant rally from the lows, when you bring up the charts on the individual stocks, they look like a blip. doesn't look like that much, especially on some of these tech stocks. I mean, Amazon, yeah, we've rallied, but this was $2,000 back in October. It's $1,500 now. So you got a third, you're talking a stock that's fallen 25% here in the last month or two. And it's had a nice rally from 1,300 just a week and a half ago. But really, when you put it in perspective, these stocks are still in significant downtrends.
Interesting that several analysts have come out this morning acknowledging Apple's Tim Cook's comments yesterday and saying they expect it to be even weaker. Bank of America and Goldman Sachs both came out this morning with more negative commentary, saying they expect the numbers to be even worse than what was given yesterday. So we'll see what happens in Apple here. So we discussed Apple, we discussed biotech. Where else are you looking this morning, Dennis?
Well, those are the two things, obviously the tech stocks and the biotech there. So I don't know if anything else even matters here today. It's all going to be about Apple and tech, and it's all going to be about biotechs. But I'll just tell you, S&Ps, this deal helped. We were down. We're up almost 20 points. What was the overnight low here, Spencer, on the S&Ps? I wasn't tracking it because I was too busy looking at all these biotech losers I had in my portfolio or my trading portfolio. But I feel like we're like 20 handles off the low now.
Looking at the futures, I'm looking at a C low 24.62.75. So
where are we right now in the futures?
24.88.
Oh, we're 26 handles off the low. Thank you very much, Bristol Myers. I mean, if you're a Bristol Myers shareholder, you're probably not pleased because your stock's trading down $6, but it helped. This helped the overall market because we were sitting down. We're up at least 15 handles since that deal was announced. So, and I'll tell you, the IBB now trading up at up 1.5%. You're seeing the XBI trying to go green here. It's obviously a lot of smaller biotechs. Doesn't have much CELG in there, but that's the sector that's showing some life here this morning. You're definitely seeing some life in some of these biotech stocks.
These every time we see an acquirer get hit, it seems like it's a buy the dip opportunity. Is that the case here this morning with BMY?
Give me examples of that because I never really noticed that, Spencer.
You don't notice that? Okay.
Do you have some examples of that?
Let me think of some.
Is there an example or two of that? And chat, you can help out with this too. I can't really, I'm trying to think back to some of the other acquirers. I mean, obviously we've had some biotechs do some smaller deals, but let's think about some big deals there. Right. I mean, IBM bought Red Hat. That was not a buying. It's hard to say that right now though, because everything's been killed too. So it's hard to say like, it'd be bad to look in the last 2 months because, it'd be market effects more than anything. But if we went out a year, I don't know if that's the case. I've never really noticed that.
Maybe I'm just making that up. I could be making that up.
Oh, you could be right. There could be something there. So that's something to research. I mean, if you want to do research on that, I don't know if that's true though. So that's why I'm not going to comment on that.
Fair enough.
That is true.
Another thing we were noticing last night is Burke was trading down, Berkshire Hathaway, because Buffett is so big in Apple.
Yeah, well, that's it. Berkshire Hathaway is going to get hit a little harder than the overall market here because they do have a huge position in Apple. But it's only got 1% here now too. Market, very resilient here. This is impressive comeback here. And I do think, the CELG deal had a lot to do with this. But, I mean, it's impressive. A lot of these tech stocks are starting to sneak back here too. I mean, Microsoft's only trading down $1.37 here now. It was down way more last night. You can look at Alibaba's only trading down $1.40. It was down like $3 last night. You're seeing a lot of bounce here. So that is impressive in itself. Can they hold these bounces or do sellers come in here and say, thank you for a little bit of a bounce, I'll get out? That's all to be determined here today. But, I'm not going to try to make any predictions now. I'm not going to call 1,000-point up there, 1,000-point down. And you're not going to get a lot of predictions out of me here today because this is a very confusing tape here right now. We have very good news in the biotech sector, very bad news in the overall tech sector, and we have a spooked market. We're still spooked overall. It was starting to get some confidence back, but now it's spooked again. What does that mean? What is the institutional money manager going to be doing at 9:30? That's the question with the overall stocks. They've got, there may be buyers, there may be sellers. We got to find that out. So that's why I'm going to be kind of sitting on my hands here to a certain extent. I'll be working my ARB still, but, making a call or swing trades, I'm not doing any of that now. I'm going to sit back and see what happens here and maybe go with the flow. If it looks like they're going to buy it back, maybe that's something, but just always watch. Sometimes you get a little bit of, rally here in the first few minutes, like we call suckers rally, suckers some people in, and then more sellers come in. So lots to think about here today in a very tricky trading day. So that's why you're not getting any calls from me today.
So will the opening imbalances with 5 minutes be extra meaningful today since you don't really know which way the winds are blowing?
You know what? I doubt we're going to see them in 6 minutes. I doubt that the institutional money manager is going to be showing their hand. So I think it'll probably be small again here. And that's obviously, just because, when you see Obviously, this market, as wild as it is, the institutional money manager doesn't want to tip their hand off. They don't want anybody sniffing out their orders, and they don't want to show their orders. So I'd imagine they're probably going to be fairly small. Usually you see at 9:30 a lot of obviously those orders come in and stop. The markets move a lot more. And you can tell I'm really with the radio show here today, I'm struggling with my talking because I'm trying to trade at the same time. I'm trying to see everything going on. It's a very confusing day for me. That's why if I somewhat seem confused here as I'm talking on the radio, it's because I am confused here today. This is a confusing trading day.
You're always confused, Dennis. And interesting that we're seeing.
Not always. Not when I made that 1,000-point Dow up call there last week when you missed it there, Spencer.
That's true. I was out.
So I get it right every once in a while.
It was out.
And sometimes I just am in the zone. I feel like I'm out of the zone here today just because there's so much news.
You saved your best call of the year for the end of the year, and so
and you missed it.
I missed it. I'll wait for your next one on December 28th, 2019.
One thing to say is one thing helping the market here today is oil. Oil's rallying here again. So you look at that and you think, wow, maybe we're onto something here because oil is obviously getting a nice lift here in the pre-market. So there is some sectors helping here today. So it's not only biotech helping, oil is going to be helping here too. ExxonMobil now trading in the green, BP trading in the green here this morning. That's obviously active over in Europe. So that's an active market when I see that trading up almost 1%. So you have the financials actually, which aren't down much here either. I mean, Bank of America is only down 0.5% here right now. So very interesting market here this morning. So we're seeing some life from a number of stocks.
On top of that, we had the ADP number come out at 8:15. It was the largest payroll increase in nearly 2 years. 271,000 versus 170.
Too much news. We need like a news interpreter here, just sitting on the side, interpreting on the fly here.
Well, we should do is build our.
I guess that's why we have the Benzinga desk.
We should build our own algo. Build our own algo to read the news for us. The pre-market prep algo, and
it's a lot of news here. It's very, very interesting to try to figure out everything that's going on because it is a crazy morning, guys.
So when you say you're confused and you're just going to mostly sit on your hands while doing your typical ARBs, what does that really mean?
Well, when I see, a one stock versus another stock, and it can, and maybe sympathy plays, I'd probably be trying to buy some biotech stocks here at the open. Some of the smaller plays, maybe you get lucky, the market's down. Maybe some of these biotechs open down and give you a shot. So I'll probably be playing that. That's just, basically pair trading sympathy, statistical arbitrage. And then, there's, index arb that I do all the time from the pre-market and after hours when you see a stock trading a little bit too low relative to where I feel fair value is. It's the old Don Bright strategy. I buy it and sell some of the stock short. But with so much news, you got to be careful. So obviously, tech stocks we know are going to be relatively weak to the overall market because of Apple, but we know biotech is going to be relatively strong. So basically, I'm biased to be buying biotech stocks if I can buy them on the cheap, and selling tech stocks, flat out stocks that are related to Apple, if I can sell them, and they're a little bit too high. And that's what, I'm always doing is basically I've got this fair value logic, some of it in my head, some of it in systems, and playing, around that. So that's kind of how I'm working it.
What about, the follow-through move here from Tesla yesterday? We had the news come out sometime around 8:30 in the morning yesterday, and of course, they hit the stock there. Now we've had a full day to digest that. So what do you do with Tesla here?
I mean, it bounced again at the level that it's bounced multiple times. So it's very interesting how these levels work. Good props to Joel. He wasn't here, but I know he would have been pointing out the 294, 295 low. Got down to 298. So interesting enough, it gets down there, hits a couple stops at 300. You often see that. Got up to like 338 the day before. And they like to take them through the big hole numbers because they know they're going to hit some stops. So a lot of times you see them rebound when they hit through the big hole number, hit some stops, and then the rebound happens. And that's what we saw happen here. So if you look, obviously Tesla, trade down 298, had a nice rebound after that. So that's the one good news. It actually got all the way back up to 315, which is incredible. So got back half the losses from yesterday after basically cutting guidance as well. I guess not. Well, yeah, it was basically cutting guidance and lowering the price. So it wasn't good fundamental news, but they kind of shrugged it off to a certain extent because it came back half those losses. Now it's getting hit here this morning. I think you got buyers in the lower 300s. I think there's shorts that would probably be, there's a lot of people short the stock. People willing to bring it in down there. So I think the 295 area, I like it long better than short. If it takes out the 295, so if I was going long, let's say 300, you get another shot at 300 today, maybe because the overall market's weak. If it takes out 294, I wouldn't want any part of that. If it takes out 294, then I think you could be at like 280, 270, 260. So I definitely, if I was playing from the long side from a swing trade, which maybe I'd try it, I would want to lean on that 294 out. So if you're risking yourself $7, maybe going for a bounce. But these things, when they come out with bad news, tend to just not bounce right back. So I don't think it's going to be back at 330, 340. So I don't know if there's any hurry to jump in here and buy Tesla now, even though I still like the fundamental story and I still like the stock long term.
What made 294 stick out to you?
Two lows there in the same area. So the recent low. So 295.19, the low on the 24th, and then the next day on the 26th, 294.09. So two lows within a point of each other. And that's where we bounce 50 points from. So when it gets back down there, where I say price has memory, you think, oh, maybe it comes back down there. Maybe people are interested in potentially, covering a short or initiating a long at those prices. So just basic levels, what jumps out at you on the chart. Simple technical analysis, but something that me and Joel have done for a long time. We've done successfully. We really like our levels, and that's always a technical analysis. I look at support, resistance, and trends. You had support there back on the 24th and 26th. I think you get it there again.
All right. I know you said the institutions may not be tipping their hands, but the imbalances are out today.
They're tipping on a few.
They're tipping.
So Taiwan Semiconductor, not surprising. Apple supplier here going to be getting hit. TSM trading down 3% in the pre-market. 148,000 to sell. That's significant. So that's standing out here this morning. I'm trying to look at the other ones here. And remember, NASDAQ imbalances don't come out till 9/28. So I'm not going to be able to tell you anything like CELG or any of those. And most of your biotech stocks are in the NASDAQ, so it's not going to help us much. But you know what? They're pretty small. That's one really standing out to me is TSM with 148,000 to sell. I see other small sell imbalances out there. Obviously, with the market trading down, you see most of the banks, Citigroup, Bank of America, Morgan Stanley, all sell imbalances there. But it's early, and I don't see that much that's really like, whoa, I don't think imbalances are moving the market. Not here this morning.
Okay, so 8:31, we got 4 minutes to our guest today. That is Phil Davis of Phil's Stock World. If you have any questions,
Phil's World.
Yeah. Do you ever say that when he's on the air? I don't know.
No, I don't know. Should I? I don't know if he'd like it or not.
I don't know if he would either.
I love Phil Davis. I don't know if you remember Wayne's World. That's what I'm always doing from Wayne's World on Saturday.
Yeah,
Phil's World.
Yeah, no, we get it. We're just not sure if he would like it.
Should I do it? It's on there.
Sure.
Maybe he'd like it.
Sure.
Maybe he'd start using it.
Maybe he would. Maybe he would. All right, any questions?
It's an awesome name. I love it, Phil's World. So we're gonna get him in 2 minutes here. Phil's always got some good, and he's a deep value guy there too. So it'd be interesting, if he's played any of these biotechs or if he had any positions on any of these CELGs or anything there, because we know he's a value trader as well. So he's looking, he's crunching numbers, and he's figuring out where there's value, and he strikes. So it'll be an interesting day for him to get Apple commentary as well, because Phil's always, the deep value guy, and he's a little longer term than I am. Obviously, sometimes I'm in seconds. But great trader, and he's got a lot of little different strategies than we do. So it's always nice to get some diversity from when we're listening on the show here.
I want to go on this comment from Spinner here just now, looking at the FANG names and how they have digested this Apple news this morning, because they all tend to move together mostly, or at least that was the case. So let's look at some of these FANG names here. I mean, we did Microsoft, but let's look at like a Netflix here.
Go through them all. Facebook. Start with the first one. Facebook. Trade down 1.2%. Facebook has bounced. Nice bounce for Facebook yesterday. So, this was a great day for the market yesterday. I know we weren't up much on the S&P, but individual stocks are really well. Facebook opened up right near the lows. And it really had $8 yesterday at one point in time. Up to 137.51, sell to 135.68. So you know what? I think you get back down to 130. I think you got buyers. So Apple did poo-poo the whole overall market here, for lack of a better word. But I think, with yesterday's rip, I think there's going to be some people that are interested in either if they were short, bringing them in. I'm talking shorter term traders, or potentially initiating long. So there's some support down there at 130, 120, 128.56, 130. There's some support there. So again, the lower 130s, I kind of like it from the long side.
Amazon.
And a lot of these charts yesterday I didn't like, but yesterday's tape changed them a bit. Now it's going to change again here. Amazon, same story. Open up right near the lows and ripped up. I mean, it was a good day for Amazon. Again, the market here is, going to, hit it here today. But maybe you find buyers in the 1500 area. Get down there. I think, 50% retracement of yesterday's move, 1460 up to 1553, talking a 90-point range. Knock 45 points off the high, puts you at 1505. I think you find buyers in the lower 1500s. So not as bearish as I was yesterday, even though this Apple news is there on the technical so far.
Netflix.
Again, same story. Nice pop. It stalled out near the previous day's high, which is never a good thing. 270.10, 269.74, because me and Joel would call that a double top, and that's never a good thing. Coming back down, but I would say you also got close to a double bottom there too. Well, not really. 256, 260. Let's see what it does near yesterday's low. Get down near 256, 258. even 260 from the previous day's low. I think you got buyers down there too. So there is going to be some underneath demand here. So you got overhead supply, and you got nervous Nelly still longer term, maybe with this Apple news. But there's going to be some underneath demand there too. So they've got to hold yesterday's lows, though, guys. So that's what I'm going to say. It's a big day for the market. We need a lot of these stocks. If they do test these lows, we need them to hold these lows, because if they do not, that is not a good sign for them.
And then last one, we'll do a quick Google. I'll do the GOG.
GOOG trading down 12 points here in the pre-market. Again, same story. They all move together. We know this bang moves together. Got down 10.15, basically opened at the low yesterday and rallied 35 handles right up to resistance, which is 10.55, 10.50. So you got all kinds of overhead supply around 10.50. That's the bad news for Google. The good news is it was a good candle. I think you have some people that would probably maybe be looking if it came back down 10.25, maybe saying, okay, yeah, maybe I should start sneaking out of some of this. Maybe the Apple's a gift to the, definitely a gift to the shorts. But maybe it doesn't hit all these things long term. It's so many question marks around this day, and that's why I don't want to make any predictions, because you got the good news of CELG, getting taken over. You get the bad news of Apple. You've got the market here kind of holding up better than you would think with a warning from Apple. So there's a lot to be determined here, but I'd say look at those lows from yesterday. See if they hold, and if they can, then, or if you start getting down to 10.25, you start getting near those lows, and you start seeing the stock start to round and start to turn higher, maybe you take a shot on the long side, stopping out at the previous day's lows, though. So always have an out.
All right, maybe our guest will be willing to make some predictions. That's Phil Davis, founder of Phil Stock World. We'll be right back in a moment while I grab Phil. All right, and as promised, we are here with Phil, Phil Davis, founder of Phil Stock World. Phil, how's it going today?
Oh, great. Having lots of fun watching Apple.
Yeah, so that's what we were talking about. Kind of the theme of today's show, or at least for Dennis, is a confusing market. Bad news for Apple, good news for the biotechs. Not really sure what to do with all this information. We'll start with Apple. I guess we'll start with your reaction from yesterday. Give us your initial reaction to that.
My initial reaction was, holy crap. I mean, it fell 10%. So, I think for your listeners, I think the more important thing, though, is to understand like how to deal with something like this. And I'll tell you what we did, because we own some Apple. We're buying more right now. And I'll tell you the reason, because the first thing we do, though, is we look at the NASDAQ and we say Apple fell almost 10%, and Apple's practically 20% of the NASDAQ. So of course the NASDAQ's going to fall 2% following Apple. So that's an easy one. So you watch the NASDAQ to see if it falls 2%. You assume some of the components will go down, so on and so forth. But and then you have to figure out if you think Apple's probably going to bottom here. You have a couple of factors. One factor is that the 200-day moving average for Apple is right about 140, so it's not likely to go much below where it is right now, not without a bounce. Second of all, 6,200 on the NASDAQ on the NQ futures is good support. So what we did is we jumped in, not on Apple, we jumped in on the NASDAQ futures and picked those up at 6,200. And those paid $20 per point on the way up. So we like that for playing this morning. We started that one early. As to Apple, though, and this goes for any time you get hit with a stock, you got to pull back and start doing the math and be logical. And what Apple said is that they're only going to sell $84 billion worth of product this quarter. So that's the start of 2019 for them. Their fourth quarter is Q1. That's $9 billion less than the high end of their guidance. So that's the high end of the guidance, not the low end of the guidance. So a 10% drop on Apple, maybe, but not from where it already is. It's already dropped more than 10%. It's already dropped about 30%. So it gets a little silly at this point. You do that math. Then you look at what they said. They also guided their gross margin lower. They guided it to 38%. So the thing about it is anybody can do this math. If you take $84 billion and multiply it by 38%, it's $31.92 billion. He just told you what his earnings are going to be for the first quarter. And now you say, well, gee, is that good? Is that bad? What is that? Well, first of all, $31.92 billion is a massive amount of money. I don't care how you slice it. But the second thing is if you go back to last year's fourth quarter, it was $33.9 billion. So it was exactly $2 billion less than they're making this quarter. And if you look back at Apple last year in the first quarter, they were at 170. And it went obviously way up from there to 230.
Right. So they print money. Yes.
Definitely bargain here. It's an overreaction.
Yes, we know that Apple prints money. Of course, they're sitting on Mount Everest of cash over there. And you said you already own it. And this dip here this morning, does it make you more bullish?
It doesn't make me. It makes me more bullish than what the price is. It's like what we do. Oh, here mostly we buy spreads. Like Apple doesn't pay a good dividend, so if the stock doesn't pay a good dividend, we pretty much never buy the stock. We buy bulk call spreads instead. So with Apple, we have like a 160, 220 bulk call spread for 2021. And what you do when you have a situation like this is you don't buy back the short calls because the volatility increases the price of the short calls. But what you can do is you can take your long calls and roll them lower to a deeper strike. And you can usually do that for less than 50 cents on the dollar. So if you go down to like from the 140s, from the 160s to the 140s, you can do that for less than $10. You might even be able to get to the 120s for less than another $10. So you follow your stock down. It's not a big, you're not doubling down. You're spending $20 more to drop your strike $40 in price. And that's your initial reaction to something like this. I mean, assuming you want to stick with it. And like I said, doing the math just now, we're like, there's no way we're not sticking with this thing. This is stupid. He just told you he made $32 billion. What do you want a company to do to make you buy it?
But doesn't this, and then long term though, doesn't this increase the pressure on Apple to really develop their other revenue lines and become more of a services company and be less reliant on iPhones?
I got the impression that Tim Cook is actually very pleased with the service revenue at the moment, and that they'll break out when we have the report. In fact, he's saying we're going to break out services, so we'll get a good look at services when they do their report. But that's not going to be until like the first week of February. I don't think anything's increasing the pressure on Apple. I think they're developing a lot of stuff in a lot of different fields, especially the Apple car environment that they're working on, the Apple home environment they're working on. They even got their fingers in some self-driving cars and stuff. I don't think you have to worry about Apple and whether they're moving into diversifying their holdings. It just so happens that right now the iPhone is their number one thing. But the issue with the iPhone is 90% of the problem is China. And China's right now, and you guys know they're boycotting the iPhone, right? It's not just the trade issue. It's not just the tariffs. China's actively boycotting Apple products. And that was 20% of their market. So to see them down 10% is not a surprise at all.
So then, speaking more broadly about China and Chinese markets and what the EEM or whatever, does that make you? First of all, are you trading China at all, or are you just staying away from that entirely?
Well, we're not trading China, but as I wrote yesterday in our morning report, I said, look, I mean, you've got to, and I wrote why we're bullish now. I mean, we've been bearish all summer, and this is a correction we've been waiting for. And now we say, well, is it over? Is it corrected enough? And I say, yeah, I think it is correct enough because these are, for the most part, self-inflicted wounds. The government shutdown, we did that to ourselves. The China trade war, we're doing that to ourselves. This isn't a result of any particularly poor economy. Also, when you look at even the purchase managers index, which was bad, and the consumer confidence index, which was bad, last two big reports we got the last few days, those are what's bad about them is the forward-looking sentiment, because everybody is worried. Purchasing managers are worried about what's going to happen with the trade war and what's going to happen with the government shutdown. Consumers are worried about the trade wars and government shutdown. These are things that could reverse in a flash. All you have to do is actually come to a deal. Now, whether or not you trust Trump to actually finish something and get a deal done is a whole different problem. But is it going to get worse? It's not really going to get worse unless things deteriorate in a horrible way. And I don't think, now that we have some Democrats in power, I don't think things are spinning quite as much out of control as they've been for the last 2 years.
All right, so interesting that you say that you're more bullish now, and in light of this shutdown, and we have this Fed meeting coming up, we have the trade deadline coming up with China, and in a few weeks here. I'm being told in the chat to ask you about your pick of the year, HBI. I don't know if that's for this year or last year, but can you talk about HBI here?
Oh, Haynes? Well,
Yeah.
They got killed with the retail sector, so that was not the best pick of the year at the moment. We still like them, though. They're a strong company, and it was a 2021 pick. It wasn't like it was supposed to go up this in 1 year, but performance so far has been not at all good. But if you look at Haynes, I mean, it's a silly. I want to just pick up the numbers for a second and make sure I get them right. If I remember correctly, though, they're probably earning about, I think, 60. They're probably on a pace this year to make about $600 million, and their market cap is $5 billion. So their PE is something in the neighborhood of like 8. It's a ridiculously underpriced stock. It's a staple brand. It's Hanes freaking underwear. It's legs, so things like that. Hanes legs, just really basic stuff, maiden form, things that just don't go away. They're not going anywhere. And they took a big hit this year. Even so, they took a big hit over Sears, because Sears had a lot of their stuff in inventory, and they stiffed it. So that hurt them also this year. But none of that is permanent. That just means that they shuffle their stuff to other stores and they move on. That's that. They have one bad event happens, is no reason to tank a stock. But they're mostly just down with the whole retail sector, though, where nobody has any faith in what retail is doing. But this company, Hanes, they made $6 billion. They sold $6 billion in 2016, $6.5 billion in 2017. They're doing $6.8 billion this year. They're just steady, small growth, because that's what you expect out of a company like that. And we liked them because they were stupidly cheap, and they're still stupidly cheap.
Yeah, forward PE here is around 7, industry average around 16. So yeah, they are cheap compared to their peers. What about this CELG Bristol Myers thing this morning? You watching that?
We're thrilled with that because we had a bunch of CELG. We're value investors. So unfortunately or fortunately, this happens to us a lot, is that we have a stock that we've got a position in, and it gets called away because somebody buys them. It's a bit annoying because we prefer to make the money, year after year after year on a stock rather than just all at once. But it's a good buy for Bristol Myers. So he was selling for way too cheap. They've got a fantastic pipeline. Bristol Myers doesn't, and this is a great way for them to shore it up.
Are you inclined then to? I'm not sure how often you try to play, M&A, or are you inclined to maybe look closer at the whole biotech sector to try to find some cheap biotech plays that could be taken out?
Well, I'm going to have to find another one, because now they've taken away that was the only biotech company we liked. So, and not I don't want to say, I shouldn't say the only. I think it's more like it was the one we thought was the best bargain. So that's the only biotech company we had in our portfolio. So now that CELG is being called away, we're going to have to come up with something else that we're going to play.
Phil, what about What about a Gilead or an Allergan?
I like Gilead. Gilead's probably our next one. Allergan is what's the other one? Maybe is it ABB? Yeah, ABB. Yeah.
ABBV?
Yeah, ABB. No, just ABB. which is oh, I'm sorry. No, that's the wrong sector. No wonder.
Gilead, talk about Gilead for a second, because it's getting lit to 3%. So obviously some people speculating that, hey, Gilead's cheap too. Maybe there's going to be some love for them. That's why you're seeing trade up 3% here this morning. Talk, just quick fundamentals on Gilead.
Well, Gilead's a good, steady company. Their pipeline hasn't been really producing much for them in recent times, and that's been a problem. But I think they can pull that back together. It's just a question of when. But as a long-term investment at the price they're at now, I think they're reasonable.
All right, so Phil, one more here, and I'll let you run. But you said that you think we've fallen far enough here. So looking 4 to 6 weeks out, where is the market?
Well, I think, frankly, if the NASDAQ is holding 6,200 here, which it seems to be doing, I think it's then going down, because Apple's like a critical wound to the NASDAQ, and that's not taking it lower than it has been. So to me, it's actually a sign of strength that the broader index is not in the mood to go any lower than it's gone so far. We were at we were a bit below last, 2 weeks ago. Of course, we bottomed out just about 6,000 or 5,900, I'd say, on the NASDAQ. But holding 6,200 now is going to be a very good sign that we're making progress. We're catching up. It's from 5,900 to 6,200 is, other than the NASDAQ 100, of course, and it's dominated by Apple. That's a 5% improvement to get back to 6,200. So if it's holding the 5% improvement off the bottom, then we can look towards a 10% improvement. So we're going to hit 6,500 probably next week, I would say, as long as Apple stops going down, but I also think Apple will stop going down within that. And I think that these other things are going to start happening. Like, you've got companies like CELG that are just so stupidly cheap, and Haynes for that matter. I mean, Haynes is ridiculously cheap. It's so cheap, I would buy the whole company if I had that kind of money. I mean, some of these stocks are just insanely cheap right now on the sell-off. So it's no longer the case where I couldn't find anything to buy. Now I'm finding so many things to buy. I don't have enough money to buy all the stuff that I like.
That's a good problem to have. Phil Davis, founder of Phil Stock World. Phil, as always, thanks for your time, and we'll talk to you later in the year.
All right. Thanks, guys. Great talking to you.
All
Have
right.
a good day.
All right. 8:52 now, Dennis here, and we're sort of just hanging around. I was thinking about this during Phil's interview. This is going to be a very interesting 2 weeks here, because earnings season is going to start, I think the third week of the month. I pretty sure.
Yeah.
So we got a couple weeks until earnings season here. So the next week and a half,
News coming. More news. So you think you have a lot of news? More
Right.
news is going to keep coming here. I don't know if we're going to see any more M&A action or not, but with stocks cheap, you might see some M&A action too. I mean, that's what Bristol Myers just thought. CELG just got too cheap, so they think they're buying it at a discount. So there could be a lot more news here coming, and obviously earnings season is going to be a big wild card here. How are they going to do? Is it going to be more companies that are warning about overseas? What's going to be the theme here coming into earnings season? So many unknowns, but lots of catalysts. So that's why volatility is probably still going to remain high, because there's going to be lots of whipsaw action with a lot of fundamental news coming out.
All right, and I know, on days like today when there are some really seriously big news catalysts, the ratings don't matter as much. But with that said, I'd like to run through a couple of the notable ones anyway, just so we're all on the same page. As my browser freezes up, there we go. Okay, so looking at my Pro here, we have upgrades this morning to Cintas at Bank of America to buy, upgrade Teva, Bank of America to buy. Upgrade Cigna from Raymond James, CI to outperform. What else am I seeing? Evercore upgraded Anthem, ANTM to outperform. And those are sort of and Goldman Sachs upgrading First Solar to buy, raising their price target from $48 to $57 there. So those are the most notable upgrades that I saw. Also, Goldman upgrading CSIQ. Goldman upgrading First Solar and CSIQ
First Solar is an interesting chart. We're going to get a breakout maybe above the high from 3 days ago here because we're trading 44.10 here in the pre-market. So now you think $45, that's probably the first level. That's where it really had resistance multiple times. Let's see if it can get up through 45. If it starts to get up through 45, then you got the double top around 47.79, 47.53 from back at the end of November. So showing some life. And, I think I'll pull back here maybe for Solar. It's interesting. This was one that's been on my buy radar for a long time. I haven't pulled the trigger, probably because I haven't pulled the trigger on any long-term buys, just because it's been such an awful investing environment. But I don't mind it here. So I'm interested too. And I'm probably not chasing here this morning because this market hasn't paid to chase. And it looks like First Solar is going to open up a couple of points with the upgrade. But on a pullback, get back to the 42.50 area, maybe I'm interested.
What about CSIQ here? Also getting a
smaller play. We've had who's our Gordon Johnson. He's my guy on both of these, really. I mean, when Gordon comes and going to upgrade First Solar, I'm probably going to buy it that day because it seems like nobody knows solar better than Gordon Johnson. Where's Gordo on CSIQ?
Oh, he is. I believe he's still on sell
rating. It's neutral or sell. I don't think he's a buy.
He is neutral. He's got a hold.
He's got a hold on it. When he goes to buy, I'll be interested in CSIQ. Until then, I'll wait. I'll wait for Gordo.
As far as downgrades,
Gordo needs to give me the green light.
Okay. As far as downgrades are concerned, Bank of America downgrading a host of healthcare names. AbbVie, the most notable, they're downgraded to neutral. Lumber Liquidators down this morning. They got downgraded from Loop Capital to hold. Price target lowered to $10 there. And that
Lumber Liquidators, I haven't looked at that chart in a long time, and man, this thing has been just killed too. Had the big comeback. We know they had the whole formaldehyde issue back in 2016. It got down to $10. 2016, 2017 rallied back to 40. That's all gone. Now it's back here at 948. Oh man, that's not a good looking chart at all. But you know what? Short term here, this pullback. Let's see what it does. Yesterday's low 939, 935. You got a tradable bottom here. If it can hold yesterday's low and shrug off this downgrade, it'd be interesting. And you're only risking a dime here. Maybe it's okay. 940. I'd say stop out like 9.25. Give yourself maybe a little bit of room through there, but it's not a bad risk reward here. As long as you stop out, don't let it start making new lows and you get stuck with it.
All right, Dennis, you noted in our chat in the premarket.benzinga.com chat during Phil's segment that the arms are in control now of this Bristol Myers CELG trade. So now that we've had another half hour of trading and time to sort of digest the morning's news, do you still feel the same way you did at 8:20?
Yeah, they're just trading. Now the ARBs come in. So it's all about the discount to the spread. I said this morning, I thought when it was 7 points, it was too tight. And I put the spread on. I'm up in it, so I must be doing okay. Let's see where it is now. So 47 just had $50, 97. Yeah, it's 8 points, so it's wide now. So I said this morning when I was putting on at 7 points, it was too tight. I thought it should be 9 to 10. I was thinking more. Now it's starting to come back in, so I'm getting a little bit of money back there. But like I said, I've had a rough morning in the biotech sector, so it's going to be a little bit rougher start for the year for me because I had some shorts in the wrong places in my trading account. Obviously, my investing account doing good with the CELG though.
And let's do one more look at Apple as we get to the end of our show here, Dennis.
Apple is trading down, making new lows in the move, 14 points. So Apple not rallying with the overall market here. I mean, when I look at what the driver here is this morning, and you can quickly look here and see it's what is green here is oil stocks and drug stocks and the smaller biotechs. Gold having a decent day. Gold has been, we just had a question from the chat on gold as well. Am I interested? I mean, the trend's your friend. It's moving up, but actually I'm more interested in lightening up a long-term into this because I'm not a believer in gold long-term. So if you have gold in your portfolio long-term, I think it's a great idea to maybe start lightening up, just my opinion. But if you think there's rough waters ahead, and I do own some silver, if you think there's rough waters still ahead and you think the market's going to be breaking down new lows, gold and silver is going to probably continue to rise. So this is just a counter market trade. And if the market stabilizes, starts going back up, you will see the money come out of gold in a hurry. So basically, you're just when you're long gold, silver, you're short the market.
We talked about the miners yesterday, right? I feel like we did.
Yeah, I think we did. The only thing of interest is, Rand Gold now and Barrick have merged, so that's under GOLD. Right. Really toppy in the 14 area, so not showing that much light. You look at the chart of GOLD, Barrick Gold, or you can even bring up the GDX. in, gold is a good example though, GOLD. I mean, really, the stock $13, it was 2 months ago. So gold, GLD, has rallied 117 to 121. GLD hasn't participated at all. Gold Corp, GG, was 980, like back there. I had a bad, little time, but it hasn't really participated at all either. Are these going to eventually start participating? Gold keeps rising? Yes, but the relative strength on the individual miners has not been great. The miners, and maybe it's because they're stocks, but it seems like, they kind of go up a bit when gold goes up. When gold goes down, they really go down. So it's tough to own gold stocks. I don't know. Just long term, I'm just not a fan.
All right, that's it for today's show. Looking ahead to tomorrow's show, we have a great guest for you. John G. Inch will join the show, our favorite GE. It's been several days. We haven't talked about GE in the last 2 days since I've been here. So I haven't spoken GE in 2 weeks. So that means we got to talk about GE on tomorrow's show.
Huge guest.
So we'll do that with John on tomorrow's show. That'll be 8:35. If you missed any part of today's show, catch our podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play. Just search for Benzinga or PreMarket Prep on any of those platforms. Thanks to our guest, Phil Davis. Thanks to all of you in our chat rooms, both on YouTube and premarket.benzinga.com. Please remember, all the information from our show is for informational purposes only and not meant to be investing advice. On that note, hope everyone has a good rest of your day, and we'll see you on Friday.